If you're a driver in Florida, you definitely know the feeling. It seems like your car costs just keep going up and up. But what if you could actually fight back? Today, we're going to break down why owning a car in the Sunshine State is so darn expensive, and more importantly, give you a real action plan to lower both your car payment and your insurance bill. So let's just kick things off with a number that's, well, it's pretty shocking. Drivers in Florida pay anywhere from 40 to 45% more for car insurance compared to the national average. That's not just a little bit more, that's a huge chunk of your money. We're going to figure out why and what you can actually do about it. Now, we're not just pulling these numbers out of thin air. All the info we're covering today comes from some really deep research. We're going to hit all the major takeaways right here, but if you're a data nerd and you want to see the specific rate tables for yourself, the links are right there on your screen. So, with costs this high, the big question is, what can you even do about it? Well, the good news is you have way more control than you probably think. And it all starts with just understanding where your money is actually going.
First up, let's talk about your car loan. A few things factor in, for sure. But your credit score, it is without a doubt the single biggest factor that decides your interest rate and, of course, your monthly payment.
Okay, this slide right here really paints a picture of how powerful that credit score is. Look at this. For the exact same $40,000 car, on the exact same 48-month loan, if you have excellent credit, you're paying around 4.47%. But if your credit is just fair, that rate jumps to 6.17%. That might not sound like a world of difference, but trust me, it adds up to thousands of dollars in extra interest over the life of the loan.
And here's where things get kind of weird in the Florida market. If you're buying a brand new car, hey, good news. Rates in Florida are often below the national average. But if you're shopping for a used car, it's the total opposite. You're probably going to face rates that are higher than what people pay in most other states. So what's the big takeaway from all this loan data? Here's the tip. While a car dealership might offer a super flashy rate to someone with perfect credit, the research consistently shows that credit unions are your best bet. They offer the most stable and competitive rates across the board, especially if your credit isn't absolutely perfect.
All right, we've got loans covered. Let's switch gears and tackle the other side of this problem, that massive insurance bill we mentioned. Understanding why it's so high is really the first step to bringing it down.
It's easy to think your insurance premium is all about you, your driving record, right? Well, in Florida, that's just a small piece of the puzzle. As you can see here, your rate is getting hammered by statewide issues. Tons of claims, weird no-fault laws, hurricanes, and a whole lot of people driving around with no insurance at all.
To even drive in Florida, you have to know about PIP. It stands for Personal Injury Protection, and it's the heart of our no-fault system. What it means is, if you get in an accident, your own insurance policy is the first one to pay for 80% of your medical bills, no matter who actually caused the crash.
So the state says you need 10 grand in PIP and another 10 grand in property damage coverage. That makes you legal to drive, sure. But let's be real for a second. In a serious accident with how much car repairs and hospital bills cost today, is that $10,000 really gonna cut it?
And this number, wow, this really helps answer that question. 1 out of every 5 drivers on the road in Florida has no insurance. 0. Just think about that for a second. If one of them hits you, there's no insurance company on their side to pay for anything. It's all on you.
And this is where a really small investment pays off big time. Check this out. For about $50 to $100 a year, you can add uninsured motorist coverage. When you remember that 1 in 5 drivers is uninsured, it is by far some of the cheapest and smartest protection you can possibly buy.
So how you approach all of this really comes down to one simple question. Are you buying a new car or a used one? Because the playbook for your loan and your insurance is totally different for each. Let's break it down. If you're financing a new car, your hands are pretty much tied. The lender is going to make you carry full coverage, period. But with an older used car, you've got options. Here's a great little trick, the 10% rule. If what you pay for collision coverage for the whole year is more than 10% of what your car is actually worth, it's probably time to think about switching to liability only. Now, let's talk about gap insurance, because for a new car loan, this is absolutely crucial. You know how a new car loses value the second you drive it away? Well, if that car gets totaled, your main insurance policy pays you what the car is worth today, which could be way less than what you still owe. Gap insurance covers that gap, so you aren't stuck making payments on a car that doesn't exist anymore.
So here's the bottom line. Don't just set your insurance policy and forget about it for years. Think of it as a living document. The car you own today is worth less than the car you bought last year. That full coverage that made sense then might be a total waste of money now. You have to reevaluate it every single year.
Okay, we've gone through all the whys. Now for the fun part, the how. This is your game plan, real concrete steps you can take, like today, to start saving some money. To get that insurance bill down, just run through this checklist. Yeah, bundling policies can help. Taking a driving course, sure. But honestly, the one that's going to save you the most cash is almost always the fourth one. Shop around. You have to get quotes from at least 3 different companies every single year. And for the loan, it's all about preparation. Know your credit score before you even think about going to a dealership. Get pre-approved by your bank or a credit union. When you walk in with your financing already locked down, guess what? You're in the driver's seat of that negotiation, not them. I want to leave you with this one last really important thought. Florida's legal minimums are just that. They're the absolute minimum. One little fender bender with a modern car, full of sensors and cameras, can easily blow past that $10,000 limit. And then you are personally on the hook for the rest. The state minimum isn't the finish line. It's just the starting line for protecting yourself.
Look, everybody's situation is a little different, so use the resources on your screen to really dig in and get the info you need. The real key here is that by understanding the system and actively managing your finances, you can take back control. You can lower the cost of driving in Florida. So the only question is, which of these steps are you going to take first? For all the data we discussed, please visit the URLs on screen.